Google stock is continuing to soar after releasing their latest quarter's earnings. We can see they're currently trading at $275 as of market close, but in after hours, as of this moment, they're up 6.5%, trading at $293 per share. In the last year now, they're up 63%. Year to date, already up around 45%. There's plenty to break down, so let's go ahead and get into it. Now to start, we can see Q3 GAAP earnings per share of $2.87 was a beat by 61 cents. Revenue of $102.35 billion was up 16% year over year and a beat by $2.21 billion. So massive beats on top and bottom lines. But here's what's absolutely mind-blowing about this earnings report. What's been the major threat that we've been hearing about Google over the last few years? It's been all about the threat of AI and AI eroding Google search's moat. The argument was that Google was a dying business. And for reference, I want to show you, we can see right here, in early February of this year, Google was trading at over $200 per share. We saw the stock sell off all the way down to around $145 per share, and sentiment was at an all-time low during this time. I saw all type of financial media outlets claiming that Google was a dying business. And it was about that time, you can see 7 months ago, that I stated Google looked like the best opportunity in the market. So what changed about this stock that caused it to go from $146 all the way up to now $291 per share? There's one key metric, and it's the growth in the Google search portion of the business. Everyone who believed that AI was going to take Google's moat believed that the Google search portion of the business was going to start rapidly declining. But this portion of the business saw revenue increase by 15% year over year. So we're talking about rapid growth in that portion of the business. For reference, last quarter it was in the double digits as well, but now it's growing at an even faster rate. Now, I made a video about a month and a half ago as well, stating it looked like Google had a path to about $300 per share, and after this recent earnings report, it looks like they're starting to get very close to that number, again, trading around $290 per share. Along with this, we can see other portions of the business, such as subscription, platform, and devices, which is the second largest portion of the business, saw revenue increase 21% year over year. What's nice about this is a very predictable stream of income. We can see the third largest segment of the business saw 15% revenue growth. And then lastly, we have Google Network. The smallest segment actually was down by about 3%. Now, along with this, we can actually see operating margins were down slightly. 2024 was 40.3%, last year about 38.5%, but there is a note. This includes the EC fine of $3.5 billion for the 3 months ended September 30th, 2025. So perhaps this isn't the most accurate representation. On top of this, if we scroll down, yes, things like Google Cloud revenues grew substantially, but just as important, the operating margins expanded significantly, going from 17.1% all the way up to 23.7%. But then along with this, one of the other stories that we have to keep in mind, and this is a potential risk to Google, is the capital expenditures. Capital expenditures has been increasing rapidly year over year. We can see Q3 2025 capital expenditures was up 83% compared to where they were in Q3 of 2024, which was also up 62% compared to where they were in 2023. Now, let's put this into perspective. If we jump over to this ticker data sheet, I've already plugged in Google, but instead of revenue, let's look at CapEx to revenue. When we look at capital expenditures in relation to revenue, we can see CapEx to revenue was in the range of about 8, 9, 10% for most of 2022 and early 2023, but we've seen it grow substantially in the last few quarters, and Q2 of 2025 was actually about 23.28%. Why is this the case? Well, this is being driven by its investment into AI, cloud infrastructure, and data centers. This is the exact race all the big tech companies are currently fighting in. And this is the reason, if you look at their earnings report, they stated, with the growth across our business and demand from cloud customers, we now expect 2025 capital expenditures to be in the range of $91 to $93 billion. So Google is making significant upfront investments to continue to compete in the AI race, which I do think makes a lot of sense for their business, but the huge threat is if this CapEx spending doesn't pay off. We're talking about massive investments. Now, where does Google currently shape up in the AI race? With their business model, they obviously have lots of ways to integrate AI. But what I think a lot of people don't realize is if we look at the LLM leaderboards, Google's Gemini is a major player. We can see they're ranked highly in best in reasoning. If we scroll down, we can see they're top in best in adaptive reasoning. And this was true all the way back 7 months ago when everybody was incredibly bearish on this stock. But it seems like investors are just now waking up to the fact that Google is a major player in the AI race. and they have a multitude of ways they can integrate AI into their business model. Google is a business growing revenue per share, earnings per share, and free cash flow per share at a high rate now. Return on invested capital has been over 20% for 4 consecutive years now, and the margins are phenomenal. Last year's gross profit ratio at 58.2%, much higher than the 5-year and 10-year average for this business. The market is finally waking up to the type of stock this actually is. It was valued dramatically lower than the rest of the Mag 7 stocks for the majority of the year. So now the question is, what do returns actually look like for this company moving forward? What do the forward-looking returns look like? Well, if we jump over to our sensitivity analysis, let's see if we can answer that question. Right now, we're looking at Google again. We need to project future earnings growth and the projected future PE ratio. Right now, we can see from 2025 to 2029, the average analyst estimate is expecting about 14.11% EPS growth. So let's just assume that number, 14.11 moving forward. And let's assume there's no more multiple expansion, especially since the stock is now essentially trading at its average PE ratio over the last decade. If they trade at a PE multiple of about 28 moving forward, you can still see forward-looking returns still look quite attractive. We're talking about double-digit returns in the 10 to 11 or even 12% range, which also doesn't include their dividend, which is minimal, but it'll make a difference. So all in all, this was a fantastic earnings report from Google. It's been on a very wild ride over the last year, going from over $200 a share to under $150 per share. Sentiment at an all-time low. And what an incredible run over the last 6 months, now over 70% when you include after-hours trading. So go ahead and let me know what you think of Google in the comments down below. And like always, if you'd like to download any of these spreadsheets and get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials directly into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.